of the online collections technology think tank. For those of you who just joined us, hope you've enjoyed it. For those of you who've been with us already, hope you enjoyed it so far. Those of you who haven't, hope you enjoy this session. So just want to really quickly point out before we begin, and I'll hand over to Vanessa Vanessa Northam, of StepChange, that there's a panel options on your screen at the moment. On the left-hand side, you can see information on the event. You can see information on the speakers, information on today's event supporters, but more importantly, a questions tab. So we really want to encourage questions on this particular subject. Understand anecdotally that a lot of people out there from the collection space aren't sold on open banking. So I'll be really keen to hear this debate, but also get any questions coming in that you might have. So what I will do now is hand over to Vanessa Northam of StepChange, and she will introduce our panelists. Vanessa.
Thanks very much, Colin. I know we're competing with Rishi Sunak, so I do hope you're still with us. So yeah, welcome to this session. Prior to joining StepChange in February, I was actually involved very closely with open banking and worked for the OpenWorks group, was part of Tully, which was one of the first digital debt advisors to use open banking. So really looking forward to this session. I want to introduce our panel. So we've got Owen Edwards from JN Bank, and he's head of collections, and also Matthew Wales from Hoist, who's a digital performance manager. So guys, could you just give a brief overview of the organisations, your career today, and specifically what you've seen over the last 6 months in the pandemic, and then we will take it up a level and look at open banking in the round. So over to you, Owen.
Yeah, no problem. Hi there, everyone. So as Vanessa said, my name's Owen. I'm the head of collections for JN Bank, which is a startup challenger bank in the UK, which in a post-COVID world comes with its own unique array of opportunities and challenges, particularly from a arrears and collections perspective. Previously, I was head of debt management and transformation at a large building society. I spent my entire career in collections, starting on the phones as a collection agent in the debt collection agency space. I think what we're seeing in the industry is a real need to move to more innovative technology and innovative ways of engaging with customers, particularly in the current landscape that we are in. Open banking, does it present an amazing opportunity, or is it something that is, perhaps best to be avoided or not there yet? It'll be interesting to talk about that today.
Thanks very much, Matt.
Hi, folks. Matt Whale. I'm a digital performance manager at Hoist Finance. Hoist are a Scandinavian bank that specialises in purchasing non-performing secured and unsecured debt. We've got a footprint in 11 European countries. We trade under the name of Robinson Way in the UK, which many of you will be familiar with. My background is primarily in application development and innovation. So before I joined Hoist, I spent 10 years at global IT giant Fujitsu, working on various digital innovation projects for them. I think in terms of what we've seen in the last 6 months is a need from our customers to have tools that help them manage a very dynamic and ever-changing financial situation. Gone of the need for a static INE, for example. Customers' financial situations are changing monthly, if not weekly, as we'll probably find out from the announcement that is going on presently. So being able to provide tools that give customers that kind of dynamic interaction with their financial situation. And the question is, does open banking provide that for them? And it'd be good to discuss through this whether that is the potential silver bullet for that situation.
Great. Well, thanks very much. So yeah, I think there's a lot of interest in this session, yeah. So if we take a step back, so open banking kind of has been going on within the last, well, it's almost coming up to 3 years in January. So Matt, from your perspective, has it been a slow start leading to rapid adoption, or?
I think if we look at the UK and potentially Western Europe as a whole, then definitely open banking adoption in Scandinavia has been far more rapid than what we've seen. But I think if we look at the UK, perhaps it's the approach and attitude that we have to our banking? Do we see having a bank account almost in the same way that we see as paying our gas and electricity bills, that it's a utility that just sits in the background of our lives and not something that we readily interact with? Hence, open banking, perhaps customers not seeing the need for it. But I think there's also the fear factor. And I've said this many times, it's the most inappropriate name of open banking. Straight away, that strikes fear into customers that they are laying themselves bare to all manner of risk. So I think much of that has stopped the adoption. But I think we have to be honest, adoption in the UK particularly has been slow to this point and has not really progressed. And the question is, what we're seeing now, is this the perfect opportunity for us to sell those benefits?
Yeah, I agree with that. I think what we're seeing as well is it's been slow to progress and slow appetite, both from a consumer perspective and also from a collections firm perspective as well. And I think, Matt, you sort of highlighted that really well, that the name open banking, typically if you are an arrears customer, typically if you are in financial difficulty, I mean, intrinsic to collection, there is the stigma of being in debt. There is that challenge we have in initially engaging with customers. And then there have been significant challenge from an adoption perspective, because, you know, we all understand the potential benefits that open banking could bring. I think previously, earlier on in the journey, it perhaps felt like that the technology wasn't quite there for me personally. So I've been in organisations where we have implemented open banking, and then subsequently in organisations where I've chosen not to, on the basis that the actual the end result that we were given wasn't in line with what we'd expect from a good customer outcome. So an example would be data categorization. Earlier iterations of the solution really struggled to categorize customers' expenditure from a bank statement. So take any bank statement, chances are there's going to be some transactions that have just numerical digits, or they have weird wording, something like that. You know, earlier versions of it could not categorize those, so it made an affordability assessment quite difficult and often pointless. In my experience, we're then reverted back to the good old-fashioned income and expenditure form. But then, Matt, again, to your point, those are becoming increasingly more redundant.
Completely. No, very much so. And I think it comes down, and you're right to say, Owen, it's the value proposition. And that is both organisationally and customer focused. So it's understanding from an inward facing business perspective, what is your value proposition to your own organisation in terms of cost saving, operational effectiveness, greater understanding of your customer base to allow for personalisation of messaging and approach and strategy. And then also your ability to communicate the value proposition to your customer base to drive adoption, and just providing customers with the value proposition of it will help you understand your affordability. Well, to a customer in debt, I understand my affordability. I'm skint. That is why I'm in debt. It doesn't mean anything to them. And it's being able to convey that value proposition internally and externally that will accelerate adoption, in my opinion.
Absolutely. I think open banking is it's almost understanding sort of the mechanics, but actually what are the benefits to consumers? And I think that's been part of the challenge. So, okay, so we've got multiple sectors on this call, as well as FX. We've got utilities and local government. So, in layperson's terms, what is the opportunity that you see from an open banking perspective in collections across multiple sectors? Let's be really clear from the get-go. What's that opportunity?
I think you need to look at it in terms of collection life cycle and where you sit in the collections ecosystem. I would say that from instantly it jumps to you to say greater understanding of a dynamic and ever-changing affordability, which is what customers drive and need, constant visibility of how that situation changes and evolves. From my perspective, further down that collections ecosystem, many of our customers do not have a static income. They will be on 0 hours contracts. They will see their income constantly flex month on month, if not week on week. So being able to produce any kind of a static affordability view is almost impossible. And open banking instantly gives that customer the opportunity to have a tool that provides them with the one part of their life they struggled with. Customers are often in debt because they don't understand what we're asking them to do, which is do an affordability study. I've been very open about my past, and I decided to run up £35,000 of credit card debt. And became one of StepChange's customers. And I did that. And to get myself out of it, I didn't understand how to budget. And just telling me to do an I&E is meaningless. We can use open banking as an education tool as well for these customers. And I think that's very powerful, because it can, through push notifications, instruct a customer during the budgeting cycle where you currently sit with your spending, help you track it, help you stay in touch, almost as a budgeting coach. And I think that's where it becomes very powerful from an affordability perspective. And I think that's multi-sector applicable. Affordability. Everybody wants to gain a better understanding of their customers' affordability, but also help their customers understand it better as well.
Yeah, absolutely. I completely agree with that. Realistically, the benefits you're talking about, to your point, Matt, there's a great benefit to payment plan adherence, because it's not only the actual instigation of a payment plan and that initial contact, but it's also helping the customer manage their finances in a way. You've got the benefits of customer engagement. So, more customers are wanting to engage online, where a prime example is a new digital bank. Particularly with arrears customers, if you can facilitate that self-service approach, avoid the classic collections conversation, avoid the classic dialer scenarios, then you go into it significantly get better results. And then finally, there's the operational efficiency piece. It is a much more efficient way of taking an income and expenditure form. When you combine all of those together into a solution, it sounds brilliant.
Yeah,
I think as well, I like Matt's point around whereabouts it would sit in terms of the different collections cycles. So Matt operates kind of the tertiary collection space, if you like, with the debt collection agency. We're in the primary, so we're dealing with customers who are, they're live with us effectively. They have live loan agreements. The sense of customer engagement is perhaps a little bit stronger with us, and we can, we can take advantage of that. So in my sort of space, in all honesty, the main benefits we would see from open banking would be everything that Matt said, but particularly it's a much quicker, cleaner solution for us. So my FTE requirement would potentially go down because I'm able to review these statements quicker. And then as well, we retain a real strong sense of that customer engagement, which prevents further arrears down the line as well.
Okay, so we talked about two quite different parts of collection cycle. One of the phrases that we've used across the various sessions today about the silver bullet. Okay, so you've got technology, you've got the human touch, you overlay open banking. Open banking, it's definitely got its significant upsides. What are the areas that open banking doesn't quite perform as maybe the sector would have hoped or the originators have hoped? What are the potential pitfalls of open banking?
I lose my job because it was my idea to bring it into Hoist Finance, so I'll have to resign. No, the pitfalls, I think it depends. I don't think any of us are ready yet to completely restructure our organisations, say to our contact centre, we're never going to do a telephony I&E ever again. I think that the pitfalls, it's more about the value add to the customer that will be lost if we can't convey that. I think organisationally, we function today, will continue to function that way. Yes, we know we can improve. Yes, operationally, we know we can be more efficient, more cost effective. But by not adopting, that model will not fail. What we'll fail to do is realise the benefits of it as a opportunity, solution and customer offering. And I think that's the pitfall. And that is down to us as industry professionals to properly convey that value proposition, to provide the solution the customer understands why they're doing it, because otherwise adoption will not happen.
Yeah, I agree with that. I think my main comment around it would be that it's not to replace a conversation.
No.
So, having an empathic, supportive, understanding conversation with a customer where you really understand the circumstances. And what perhaps a financial statement or open banking can't really provide you is an understanding of maybe future circumstances or provide context around the bank statements. So, you obviously you could move to a self-service collections model. You absolutely could. And you could say, right, you're in arrears, complete this financial statement. We'll have a look at open banking, whatever it may be, and then we'll pull a binary decision based on your residual disposable income. Is that effective or a great customer outcome? Absolutely not. No, you lose the empathy, the support, you lose the connection. And then as well, if you think realistically, a lot of arrears customers, particularly perhaps in Matt's world, realistically, you're not going to be the only creditor. You're not going to be the only collections agency that's trying to contact them.
No.
I term it the ostrich approach, where bury the head in the sand, and that's what we're always trying to avoid. We're always trying to keep that strong sense of customer engagement, and I think that's where that telephone contact comes in. So I think moving forward, it's intrinsic towards an overall collection solution for a really strong operation and a good customer journey, but it needs to be embedded correctly in that customer journey in your current operating model. Definitely. And I think that's a challenge that a lot of operations do face. How do we embed this in the right way? How do we adjust our customer journey to take advantage of this while not losing that operation aspect?
Definitely. We talked about where open banking has solutions at different stages of the collections life cycle, but it's also important to understand how open banking can provide different solutions to different types of customer. This is not a one size fits all. Open banking just doesn't do open banking as a premise does one thing, but the data that it produces allows you to create a myriad of customer solutions off the back of it, which will all be appropriate to customers at different points of their debt repayment life cycle, their own personal circumstance. So it is definitely there as a value add opportunity, not a replace like for like, get rid of the human, stick open banking in, because there will always be a place for telephony, because open banking will not be able to handle those stressful situations with the individual that needs a comforting word, needs to understand the process, but it will suit potentially the 50% in the middle that know what the problem is, know how to serve it, want to self-serve. So they take the easy path or the quicker, more efficient path. But we need to understand that this isn't one size fits all.
Yeah, agreed.
So when I was working in the sector, one of the sort of the elements that I used to talk about is flipping the 80-20 rule. So in any sort of collections conversation, you typically, hopefully it's far less than this now, but around 80% of the time understanding the financial situation, and then 20% on the actual solutions. Do you see that open banking flips that to say, actually, let's get open banking to do some of that heavy lifting into the 20% of the call or digital conversation, and then we've got 80% to understand, engage, and explore solutions. I don't know whether you'd agree with that.
Yeah, absolutely. I think it does. Implemented in the right way, it can really support all those great things that Matt was talking about. So it can make it a more empathic, understanding, supportive conversation, because agents are spending perhaps less time conducting a investigation and trying to, understand affordability and trying to perhaps question if it's excessive or not quite right. And a good I&E call can take upwards of 45 minutes. By the end of an I&E call, it's very difficult to keep a customer engaged in terms of the actual solution. So I think you're right, it does take a lot of the heavy lifting out of identifying what their affordability is. And then that rest of that time can be put in towards, okay, this is the affordability. What is the solution to this, whether it be a payment plan, a whole period, whatever it may be.
Okay, so we're going to have lots of listeners or attendees today thinking, okay, so where do we start? What should we be thinking about? What are the organisations out there? What are the benefits? So from real practical experience, I don't know, Mark, whether you want to start with this, is what's your sort of, what are the lessons you've learned, or how have you implemented open banking?
The first thing we looked at was customer journey. And I think that's where you always need to start. Anything you do, you look at customer journey and understand that, combined with an understanding of what the technology offers, to understand where those 2 points intersect. Then it's key to understand the open banking providers, and Owen will have a much greater understanding of than me on that and who can do what, because again, this isn't a case that there is one solution out there, there's one provider and they're all the same. There's a myriad of different flavors from different providers who will all contribute towards your organization in a slightly different way, and it's finding the one that best fits you. The route that we've taken at the end of the collection cycle that we're at is, rather than providing customers with an understanding of their affordability and it's stopping there, is the value proposition of saying, if you share your customer data with us, your financial transactional history, we will use that to provide solutions to expose elements where you could generate greater affordability. So can we use that data to then onwards through USwitch, through entitled to the benefit checking solution, to say you could potentially save money here, increase income here. So what we've done there is, you've done a data transaction with us. We've given you a solution to say, we've now increased your affordability by 60, 70, 80 pounds. How would you feel about spending 30 pounds of that to pay down a debt of yours that we owe? So we haven't just stopped at the point of helping the customer understand affordability, because that for me wouldn't have helped a lot of our customers that much. Providing the solution, which is where the customer journey is important for me, was the important part. And the open banking for us was a means to an end. It wasn't just the end.
Okay. Owen.
Yeah, that's quite interesting actually. So, you know, in my experience of open banking, we've not utilised it to identify potential savings in their expenditure, and I imagine that probably creates quite a sense of loyalty and almost gratitude from the customer, which will help with the engagement piece. The experience that I've had in the past with the various open banking solutions, as Matt says, it is a really great tool to assessing that affordability in the right way. And then there are various solutions that you can go with as well. So all of the credit bureaus, Experian, TransUnion, Equifax, they all have an open banking solution that they can provide. Or there are more independent firms you can go with, such as Credit Kudos, for example, that offer an open banking solution. There are differences between them. In all honesty, I'd say the larger difference you'd see is perhaps in the level of service provided. So a smaller provider may perhaps be able to provide you with a slightly more bespoke service. You may also be looking at a slightly cheaper solution. But obviously, a lot of us do employ the credit bureaus anyway for credit bureau checking and things like that, and it could fit into a model of systems, if you like, that you might have. For example, you might use Experian, you might use the Power Curve system. Okay, well, that might make sense then to utilise their open banking solution as well, so you're all on one integrated platform.
Okay, so we've had a question coming in. So obviously, the three of us are pretty definitely on board with open banking. But what is the work to do to really drive engagement, so consumer engagement? So we talked about the fact that it's called open banking, but actually it's part and parcel of you know, a collections journey. So what are the lessons you've learned, or what have you done to drive that adoption?
For us at the moment, we're very early pilot, so our traffic through our pilot tool at the moment is organic. But as we move out of pilot and we want to start forcing adoption, for me, it's very simple. It's communication, it's value proposition. You need to communicate the value proposition of using the tool to your customer base in a way that they feel it's something they want to do, because you've got to overcome trust straight away, you've got to overcome fear, and you've got to encourage usage. And the only way you can do that is, again, I suppose in a way, it's a sales pitch. We are pitching something to our customer base in the hope that they would use it. And like any good sales pitch, the value proposition has to be perfect.
Okay. So less about the mechanics than actually what it's going to do for them.
Yeah, I don't think people, the majority of people, and Owen may disagree, I don't know, but I think the majority of people probably aren't that bothered of how it really does work at the back end. People are more bothered about, reassure me that my data won't end up on a site somewhere being sold. And people want to know, it sounds dreadful, but what's in it for me? What am I going to get out of it? I'm the important one. So it's, for me, it's messaging and value prop.
Yeah, I completely agree. It's very much setting the scene with something like this. And I like Matt's point before around utilising kind of a customer journey to work out how you go in to introduce this to the customer. And depending on what position you occupy in the collection cycle, that's going to be more or less challenging. From the debt collection agency perspective, you have customers that are perhaps very disengaged. They've been through the collection cycle numerous times. Your initial letter would usually be a kind of notice of transfer and then a welcome letter. How do you transfer those people to open banking when perhaps they've not been used to being served via an online tool recently? A lot of collections contact still is letter based. Whereas in my space, in kind of the primary collections space, we're already engaging with customers online. They already have an online account with us. They may have an app with us. They're used to communicating in that digital space with us. Yeah. In all honesty, I think it's easier in that respect, and it's easier to transition them onto that. There is still a kind of setting the scene phase, if you like. So to Matt's point, we do need to identify and highlight to them what the benefits are to them. So as an organisation, we know what the benefits are to us. We've gone through them before, but if I'm a consumer in debt, what is the benefit to me? And then how do you communicate this to your customers? How do you communicate this to customers that are potentially already in arrears? That's quite difficult as well. There is an argument to suggest, well, if you, and you can do this in the primary space, if you engage with customers prior to falling into arrears, if you have a really strong preemptive arrears collection strategy, if you make them aware of open banking before, and if they're aware of how that's kind of how you go into complete a financial statement, how you're going to engage with them, you're more likely to get an uptake. The further down the line you get, if you like, in terms of collections contact, unfortunately, the more difficult the sell is, and the more you need to sell the idea and the emotion to them, and you're selling them that this will mean that it's a fair arrangement for you. You won't have to go through a lengthy financial statement. We'll be non-judgmental. There's nothing in there that we've not seen before or that we'll be, unhappy with. And it's almost, I'd say, empowering the customer. A lot of what you find in the, that challenge to engagement is a lot of customers in arrears feel disempowered. They've had their, they're in financial difficulty. They're being told how to pay, when to pay, what to pay. It's really selling that idea of, look, we're working for you. We're giving the power back to you to an extent.
I could not agree more with that statement you've just made. And I won't eulogize about this too long, but the first thing you feel when you're heavily in debt is a feeling of lack of control and a lack of empowerment. And anything that we can provide any of our customers to feel that they are once again empowered, they are equipped to deal with the situation, for me is absolutely pivotal. And it's something that I do eulogize about within my own organization, because many of our customers, if we equip them with the tools, they are perfectly capable of dealing with the situation themselves. So let's empower them and let them do that. And I think open banking can do that. But I think it's also important to understand it's not binary with the customers. You're not an open banking customer or you're not. It can intersect different customer journeys at different points to provide those customers with a different solution. And I think that is where the customer journey part is really important. It's not just if you don't take it up at the beginning, you're not an open banking customer. It could be more appropriate to at a different point of a different journey.
Absolutely.
So to that point, so we are 6 months into the global pandemic. We don't know what we're really facing into over the winter. So is open banking, is this a prime opportunity for open banking, to your point, or is it going to be a challenge to implement something with the degree of uncertainty that's out there?
Yeah, absolutely. So I've been quite heavily involved with the UK Finance and the FCA kind of recent COVID payment forbearance guidance, trying to adapt to the ever-changing landscape and ultimately the considerations for firms around potential eventually arrears and what is operationally plausible when a lot of these customers do come off these payment holidays. I think this is really a prime time for firms to really take a look at open banking, particularly if they do have operational concerns around a lot of customers coming off these payment holidays. So the latest guidance is that firms are expected to proactively engage with customers, proactively understand affordability. If they're unable to make repayments back to their original level, so they've had a change in circumstances, they've been one of the unfortunate people to have lost their job during the pandemic, whatever it may be, the expectation is that the firm will have a conversation with them, complete some sort of affordability assessment, and then set up a suitable repayment plan. Now, usually collections figures fairly steady. You can project those with reasonable accuracy. You can ensure you've got sufficient operational resource. What we could potentially see here is a large influx of customers coming into arrears. If customers don't proactively engage with the firm, then the latest guidance is that the payments that have been on a holiday will then be judged as arrears. So we could see customers jump from 0 to 3 months arrears, perhaps default status in large numbers very quickly. These are customers that haven't been in arrears before, potentially. These aren't your typical arrears collections customers, perhaps, that have perhaps been through this before and understand the process and things like that. They will be scared, they will be frightened. I think now is the absolute perfect time for firms to look at an open banking solution if they do have concerns about their operational resource, or if they just want to ensure that customers, that haven't been in this situation before, have a solution they feel more comfortable with, rather than completing an on-the-phone financial statement, which to many people will be something that they would absolutely abhor and really would not want to do.
Yeah, definitely. I think the point you pulled out, Vanessa, about uncertainty is almost the opportunity of the big sell here, because where we have customers who have incredible uncertainty in their financial situation and trying to keep an eye on a changing budget where income is reducing, expenditure is going up, you might have incurred a fee here or a fee there, it's very difficult to keep track. The sell of open banking then becomes, let us give you an application that spins all of these plates for you. But this comes back to something Owen said before, where provider is very important. Categorization here becomes key, because it needs to be a provider that can categorize that expenditure in enough granularity that it means something to the customer. Because the customer, we need to be able to take all of that data, present it to the customer in a digestible way. And when we think that many of our customers will probably be accessing this kind of data from a mobile phone, so it needs to be iPhone 8 screen size that they can look at and very quickly see, that's why I'm in trouble, because that's gone up, and that's gone down. They're the 3 things I need to go and focus on to manage my situation, because that where I think now becomes the sell of this. It really does, because I'll be very honest, I've got no idea what's going on in my own personal finances at the moment. I'm not the CFO in my house by any stretch of the imagination, but I've got a pretty static income and expenditure situation. For people where 0 hours contract, as I said, may be incurring late fees on various other financial products, which will be quite heavy, giving them a tool that helps them see all of these multiple moving parts in a nice, easy panel is all powerful.
Yeah, agreed. And as a consumer population, I think we're becoming more used to using tools like this. So your likes of your Monzas, they are facilitating that kind of self-help management dashboard, if you like, via their apps. And this version of open banking, which Matt's alluded to, is not a million miles away from that. So customers are becoming more used to seeing that, and more used to seeing almost financial advice in that way and managing their money better in that way. And, particularly if it's a live connection, so particularly if you can continue to keep that open banking connection. I've always been a big fan of using preemptive triggers for collection strategies. So things like the TransUnion Core Monitor tool is brilliant in terms of it flags customers that are experiencing financial difficulty but aren't currently in arrears yet. And that's where you can run a really kind of compassionate, supportive pre-arrears contact strategy where you reach out to them, check is everything's okay, get to them before they kind of fall into the bury my head in my sands, I'm in arrears, I don't want to talk to you approach. Completely. Open banking can operate in a very similar way to that. Open banking can keep people engaged. If you start to see significant dips in money or in their overdraft consistently, again, it's another way to get in that preemptive contact before they hit that almost shame spiral where they don't really want to engage with you.
Yeah, definitely. But I think it brings us right back to the start of this conversation when we talk about some of the problems with adoption and the 3-month renewing of the open banking protocol and to active is something for me that we need to be allowing customers to sign up to this for 12 months at a time, so that the onus isn't on the customer to keep renewing that agreement or every 3 months, especially when we're talking about, and I'm not labeling people here at all, but potentially customers who living a financially disorganized world, and this could be something that gets left by the wayside and suddenly they're losing the benefit. And I don't know why we came up with 3 months, or whoever did. Seems to me like it was an idea of somebody sat in the bath one Tuesday afternoon, but for me it's got to be 12 months or even more from customer consent, so that it can do exactly what Owen's alluding to there and be this preemptive strike to help these customers stop a situation before it starts.
Yeah, absolutely. So if we're talking realistic steps to adoption, I think Matt's first point was key there in terms of review your customer journeys, understand where this is going to fit in, put yourself in the customer's shoes in terms of how you engage with them and how they respond. I'd consider wider your offering in terms of digital. Is this your only kind of digital touch point for customers? If so, there might need to be a bit of preface around that. Or do you have a primarily digital communication strategy at the minute where this will fit in quite nicely? Very much sell the benefits through your communication. Introduce it to them, explain to them what it is. I don't think many consumers are really aware of what open banking is. Truth be told, I don't think many people in the industry are, in all honesty. It is still new. It has had quite big adoption in more the underwriting space, but in terms of collections, obviously very, very limited at this stage. And then when you're looking at a provider, I'd suggest shopping around. I alluded to before, a major challenge I've had previously with open banking is the data categorization aspect. We are leaps and bounds on now than where we were a couple of years back when I had those issues. So it is significantly better. But yeah, you want to consider, you want to take sort of examples. You want to provide the provider that you're going with difficult bank statements and see how they categorize that data, really push them on it. Yeah. And then look as well how it appears to the customer. So if they access it via the open banking platform, is it integrated into your website or do they go to a third party? What does that connection look like? Just really consider it from, are they going to jump off at any point because the steps become a bit too elongated?
Definitely. And then I'd also say you need to challenge them, especially at my end of the collection cycle, challenge them of how they deal with those customers that live in a very cash orientated society, because obviously that's money that they can't categorize. And what does their solution do to allow customers to manually categorize expenditure themselves that doesn't involve reams and reams of form filling? They need to be able to provide a very slick way for the customer to do that, because we will have customers who are paid in cash, pay their rent in cash, do their shopping in cash, and to them open banking is no use whatsoever. So it's the provider that can do both sides of that.
Okay.
Yeah, absolutely.
So moving on from providers, we talked about consumer adoption. From an industry perspective, is the sort of the holy grail of getting greater adoption is being able to understand the differences between affordability assessed by a manual income and expenditure versus an open banking expenditure, what that does to ongoing consumer engagement, but most importantly payments. And is there data out there yet to prove that hypothesis? Because ultimately, I'm sure a lot of people on this webinar will be thinking, okay, what is it doing to those collection rates?
I think I'd probably take that in stages. The first stage for me is the understanding of the affordability, because a telephony INE, the affordability data you have will only ever be as good as the questions that are asked and the questions that are answered. And a customer who doesn't understand their affordability will answer those questions, but it's those hidden points of affordability where they're spending £5 here, £10 here, that they're unaware of, which is causing the debt problem. Now, open banking, because it categorizes absolutely everything, will provide them with all of that data to help them to see it. From an organization, it also then provides you with phenomenal understanding of your customer base, not just about driving greater payments, but it drives greater sustainability. It allows you to personalize to a much greater extent your communication strategies, your customer management strategies, and your customer coping strategies. And I think that's a key thing, so much more than doing an INE. And let's be honest, we're terrible for it as an industry. We outbound dial somebody, we get them on the phone, we then ask them a whole raft of very detailed affordability questions where the individual have none of this paper ready. They weren't expecting a call, it wasn't prepared, they're in Lidl trying to do their shopping, and then we ask them to stick to it for 12 months. It's a scenario that is doomed to failure at the start. And I know that that's very dramatic and it's deliberately made to sound that way. But by using a tool such as this, it prevents that kind of situation, that doomed to failure at the start position that can only ultimately lead to not more collections, but more affordable collections and more sustainable collections. Sorry, Owen.
Yeah, no, I completely agree. So when I've introduced open banking solutions in the past, we've run it on a champion challenger approach to Vanessa, to your point, to understand what the difference was between a manual INE and open banking. What we found is that the open banking, that the disposable income at the end is significantly lower than if done via a manual form. But to Matt's point, that's probably because the manual form is a load of nonsense. Because you are asking somebody to complete a financial statement over the phone, 40 questions, they're out with the kids, they're doing whatever. Realistically, they don't really want to be having this conversation. They don't have all the bills to hand. Yeah. And you've got kind of that collections challenge of, well, do I let them go and get the bills and come back to me, but potentially they'll never come back to me? Or do we do our best to complete it now and get a rough estimate? So we saw the disposable income go down. So the average arrangement value go down, but what we did see was a massive increase in payment plan adherence. So we weren't setting payment plans that were just meaningless effectively. It was a considerable percentage jump. Number one, because the plans were actually affordable and based on real factual information. And number two, I do think there is a much stronger customer engagement perspective with an open banking conversation, because the agent could spend more time discussing future circumstances and how they may change, more time showing empathy for the situation, and less time asking about gas and electricity bills. Yeah. So in the long run, in my experience of it, better, in all honesty, from a payment plans outcomes aspect.
That's great to hear. Okay, so we're coming towards the end of our time slot. It'd be really good to sum up in terms of, your experience to date to organize, in thinking about, shall we go for it, shall we not? What's your sort of top 3 pieces of advice to conclude on this session?
Right. For us, for us at Hoist Finance, we're already on the way with this. So we've gone for it. We've, as I said, we're 5 weeks into a 3-month pilot of driving this out. We already have quite an evolved self-service offering at Hoist Finance, Robinson Way, which is a full account customer management online tool. So this sits very nicely into that proposition. In the next 24 to 48 hours, we'll be pushing this tool out to around about 25,000 of our customer paying base to drive adoption. What would my top 3 things be? As I said at the beginning, first, understand where it sits in your customer journey. 2, understand how you're going to sell the value proposition. And then 3, understand how you're going to use the data you get off the back of it to further improve your internal processes, because that's the key thing. Use that data to continually improve what you are doing, because you will get so much. If you set this up correctly, you will get a real true understanding of your customer situation in far more detail than you've had before.
Thanks,
yeah. I guess my main tip around this would be to ensure that you're operationally ready for open banking, that you've considered customer journey from a variety of scenarios, that you've understood how it's going to integrate into your current contact strategies. It is a great tool, and it can really make a difference in terms of collections performance, but it is only a piece of a much larger puzzle. At JM Bank, we currently don't have open banking for collections, and in all honesty, it's not going to be something that we implement for quite some time. on the basis that our book is very, very small at the moment as a new challenger bank. As that grows, we'll review it, but we need to make sure we're operationally ready, and we have a lot of other more fundamental steps to take before we can focus on open banking. You know, we need to optimize all of our other strategies. We need to get our actual contact center operation as good as they can be. So my tip, I guess, with this is not to run before you can walk with it. Make sure everything works around this, and then this can really make the tipping point in terms of payment plan adherence and customer engagement.
Yeah, definitely.
Great. Thanks, both. So before we're going to go to a poll, but I think there's been a common theme across the whole morning and into the afternoon of everything being part of that sort of ecosystem, not attributing anything as a perfect solution or a silver bullet. But I think to your point, Matt, about, you know, we see an INE as a means to an end, as part of the journey, whereas open banking is much bigger than that. And I completely agree with you there about the longer term benefits and the insights that you get. So thank you both very much. It's been great to have your different experiences and share your thoughts. So I'll hand over now to Colin, who's going to run a couple of polls for us to see what the mood music is out there with our audience.
No worries. Thanks very much, guys.
Thanks, Vanessa. Yeah, so really good conversation and really interesting as well. And it'd be interesting to see people's feedback in terms of whether we've made some conversions today in terms of discussion. Because I've personally been looking around the industry for a while now and not seen any discussions on this that have been positive. So this is the first one that I've tuned into and obviously really enjoyed and found it interesting. So the poll we're going to ask is obviously related to that. And we're going to see if does your company currently use open banking as part of its collections process. So if you could choose from yes, no, the number 3 we put under consideration. So I'd like to think it's the result of today that you might be considering it. So it's a snap decision, put you on the spot. Or 4, you're not convinced that it helps with collections, and that could be probably up until as a result of today. It'd be really interesting to get people's feedback. So I'd love to hear any feedback on LinkedIn, on Twitter on this, because I think it'd be really interesting. We're obviously going to share the results of the poll on our website as well. So that's going to be equally interesting from my perspective as well. So, right, I think we're coming to the end. Yeah, like Vanessa said, if you've got, like I said, any feedback on this, have a look on the resources tab that you've got there in front of you. It's got the links to LinkedIn and Twitter. It's got Credit Connect's contact details on there. I can field any questions back to these guys if they're up for it still, although I've worked on quite hard today already. So it'd be great to get that. That's kind of where we're done for today. I'd like to thank our sponsors who've made today possible. So that's CRS, Interim and Webio for sponsoring the other sessions. Really, really great to get that feedback from everybody in terms of how you enjoyed the event. We're actually hosting more of these events as a regular thing now. So we're going to be holding as you can see on that screen now, Credit and Collections Technology Awards. We've made the decision to go online, unsurprisingly. And that's coming up on the 19th of November. So we're going to try that, make that as interesting and as interactive as we can. Probably not as great as this, but we'll try our best. So that's coming up on the 19th of November, and we'll announce some more on our website. And the other thing I'd like to say as well is we are probably this has been really successful from my perspective in terms of getting the number of attendees involved and seeing how many of you engaged. So we'll look to run another one of these latest within 6 months' time. And the plan originally was to do a face-to-face event, but I think we're going to have to look at making room for online moving forward to account for everybody in the industry. And get some more widely open discussions about these kind of subjects. So, appreciate that. So let me round off then by thanking, obviously, Matt and Owen for their contributions. Been really, really interesting. Obviously, Vanessa, who's contributed greatly to this whole event and has run all 4 sessions, and I've worked to the sort of bone, so I were a minimum of a beer or coffee at some point, but whether that's possible, I don't know. And then, obviously, thanks to everybody who's been part of today's event. You can see it up on screen, all of our speakers. And yeah, just round off by saying hopefully we will all meet again at some point face to face, but just want to close off today's event and say goodbye, and hopefully see you all again soon. Thanks a lot for your time. Bye.
Cheers, guys.